Today's topic is absolutely foundational for every aspiring trader, investor, or anyone interested in how markets really move behind the scenes. We're talking about support and resistance lines. We'll cover what support and resistance are, why they matter, how to find them on any chart, and strategies to use them in your own trades. What are support and resistance? Support is a price level on the chart where a downtrend is expected to pause due to a concentration of buying interest. When the price hits support, buyers tend to step in, preventing the price from falling further. Think of support like the floor in your house. It catches you if you fall. Resistance is the opposite. It's a price point where an uptrend is likely to pause or even reverse because selling interest becomes strong enough to stop the rally. Imagine resistance as the ceiling in your room. When you throw a ball upward, it hits the ceiling and comes back down. Why do these levels form? Support and resistance exist because of basic human psychology and market dynamics. When prices reach historical levels, where many participants have bought or sold before, they remember those prices. Buyers see previous lows as bargains, and sellers view former highs as peak prices and opportunities to cash out. How to find key levels? Let's jump into the actual process. First, decide what type of trader you are. Day traders often use 1-minute to 1-hour charts. Swing traders prefer 4-hour, daily, or weekly charts. Investors might focus on weekly or monthly charts. For beginners in day trading, I suggest starting with the 15-minute chart. Let's see how you can do it. Choose 15-minute time frame, zoom out a little, and look backward from the current market position. Now identify the recent swing low and swing high. You can do so by spotting big green or red candle near U-turn of the market. Swing lows are points where the price falls, then reverses upward. These are candidates for support zones. Swing highs are spots where price rallies, then turns downward. Possible resistance zones. Grab the horizontal line tool from the toolbar and click on the close of higher candle in swing high. Grab it again, and this time click on the high of the same candle. The zone marked here will be your resistance level or zone. Again, repeat the same process to mark support zone. After successfully drawing these levels, it's time to know psychology behind these levels. You have heard it earlier. The level which had been touched multiple times is strong support or resistance. But for me, it is completely opposite. I will explain with price logic. If you observe, you will notice price move very sharply near swings. It happens because big money or traders have entered the market at these levels, and that make these zone important for consideration. Now see, if the market again start approaching this level, what will happen? Big money will defend their fresh positions, and retailers will start piling up as they missed earlier opportunity, and they will see it as historical level. Consequently, this level will be respected and resistance will sustain. But if the market returned to these levels again and again, it tend to become weak and will become prone to be broken. Remember one thing, if a zone is being tested for 3 or more times, instead of going for reversal, look for the opportunity and plan for breakout. This is key for your chart skill development. There are certain conditions to identify strong or fake breakout. We will talk about them in separate video. For now, let's see how you can plan your trade if market approach your levels for first or second time. Look for the bearish signals like rejection candle, bearish engulfing and shooting star near resistance level, and bullish signals near support level. Prefer 5-minute time frame for entry and exit in day trading. Never forget putting a stop loss. It is one of the most powerful tools you have. Because nothing is 100% certain in the market, we always bank on higher probabilities. We will look at some stocks, indices, and crypto charts for backtesting. I also suggest you to do the same and also forward test it in the live market by drawing zones. Wait for the market to reach your level and see how it reacts. Market open near perfect resistance zone, and I will show you in the live market how good a significant support and resistance zone work. This is a live market example of NASDAQ. Go to 15-minute chart and mark resistance zone. It represents a fresh swing. Market opened big gap, and if we observe on 1 minute, you can see how quickly it moves to this resistance zone. But as soon as it reached that level, sellers defended their position at the very level that resulted in sharp reversal. Similar psychology prevails in stock and crypto also. You can see them on screen. This is all for today. I think you have understood the price logic behind these levels. Now it's your turn to back test them. Thank you for watching. I will see you in the next one.